What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. We are doing a late night edition. It is August 31st of 2022. Another great month in the books. Let's take a look at what happened for today's price action. It was some pretty wonky stuff. S&P 500 finished down 0.76%. Our NASDAQ QQQ was down 0.58%. Our IWM small caps were down 0.61%. Dogs of the Dow down 0.75%. And our ARK Innovation ETF was actually the best performer. It was only down 0.07%. So pretty odd. Like, you would think that if the market is having this really risk-off day into month end, that group would be doing the worst, right? But it actually did the best. It closed at the highest end of its day's range. Another oddity was the volatility of the market actually contracted. You can see the VIX was 1.3% lower. The only higher vol was in the NASDAQ, plus 0.22%. We did have weak breadth once again today. We had 33% advancers in the small caps, and our up volume was only 30.5%, but our trend model did flip from a -3 to a -1, so I did go ahead and add some more risk on to the table. NVIDIA, this news dropped after the bell. You can see it says that on August 26th, the U.S. government informed them that they've imposed new license requirements effective immediately, and it's going to impact any future exports to China, including Hong Kong and Russia. So this was problematic, and you can see here on our heat map, the semiconductor stocks were one of our worst groups today, and I think it probably has something to do with this news. I was taking a look at the NVIDIA chart, and lo and behold, on August 26th, when they got that news of those new licensing requirements, that's when the stock just happened to get a little bit weak. So yeah, there's always someone that knows about this stuff. But yeah, today we had a pretty negative day in the markets, right? Sectors, Chinese technology stocks were up 3.85%. We did also have some strength within that solar group, up 0.84%. We did have some select sectors. Blockchain was actually positive for today, which was odd. But then we saw some carnage in other areas. Home builders were down 1.23%. We had, what else was down big? Was anything really down big? Aerospace and defense was down pretty big, 1.02%. And then other than that, we had, I guess I'll call them smaller losses across the board. Oh yeah, also retail down 1.78%. That is pretty big as well. Style factors. We had biggest losses in international momentum, down 1.07%, and high beta down a full percentage point. Let's take a look here. We'll go through my trades in just one moment. Let's take a look at the indices. We'll take a look at the volatility. We'll just go through all of it. So we have the S&P 500. I drew on these downward trend channels, and I gotta say, the market has been very weak. We were actually net short the market. Excuse me. For really this whole sequence, I ended up covering the last piece of my shorts into this 50-day simple moving average, but we have just continued to leak lower here. So we closed out the day pretty much on the lows and pretty much right at the top of this monthly value area. Now, because futures have opened, we have a brand new monthly value area team, and with it, we have a new VPOC. And that VPOC is looming below us. So you can see this value area that is now gray. The VPOC is from when this was established. So this looming level is at 3868.5. Right now, it's looking like we might hit it tomorrow. No, I don't really know. We'll have to see what happens. The market is kind of oversold here, but we're not seeing any buyers stepping in, and in the after hours, we're already down 0.63%. I do think that bombshell news of the, excuse me, sorry about that. I do think the bombshell news of this NVIDIA, export restrictions, I think that sort of added another blow to a market that was already on the ropes, and, sellers were already kind of panicking. So we'll have to see. I think the most important thing is, how do market participants react to this gap down? If you're looking for this downward sequence in the market to end, it's actually probably better to get a gap down. A lot of times when you get the gap higher, then it's just like an invitation for sellers to step in. You end up just traversing lower the entire day. So I do think tomorrow we have the potential for just like a panic open in the indices after a panic month end. So never a dull moment. NASDAQ down 1.11% in the after hours. Geez. And this, of course, is on that export ban news. NASDAQ also has a VPOC at about 11,970 spot 5. And it's looking like we're fast approaching that VPOC. Russell 2000, same deal. The Russell 2000 is below the 50-day simple moving average. The VPOC here is a little bit further away. So that one, hopefully that one doesn't get hit tomorrow. That would be insane if it did, right? Dow Jones down 0.42% in the after hours, also has a VPOC that is fast approaching. It is so nuts. Just to note like how in the markets it's the elevator down and the stairs up. All this progress that we made in the markets during the summer, it's pretty much all gone on those headline indices. Now here's what was strange. The VIX ended up finishing out the day down 1.3%. And we had the VVIX, which also finished the day down. VVIX was down almost 3 percentage points. So it's very odd that it's like we're getting all this market weakness, but the VIX is contracting. And it might have something to do with the pace at which we're moving to the downside. In order for the VIX to stay elevated, you need large price moves. And although we've been moving to the downside, we're not getting like, negative 3% days. I guess we did have that one negative 3% day. And luckily we were short for that, which is good. So we were enjoying ourselves that day. The bonds. Let's see. Bonds. Hopefully we don't have a negative 3% day tomorrow. But we'll see. If it does happen, we'll be ready for it. Bonds were down 0.48% right now. And yeah, this is just horrible action. Like the bonds, look at their progress that they made since the summer. It's pretty much all gone, team. This has happened slowly but surely over the past couple weeks. Now, let's take a look. We'll pull up my trades for today. I'm going to be honest, I think today I may have, made some tactical errors. We'll have to see. I did get long these Wolf common shares. I averaged in over 2 allocations. I got an average cost of $115.27. And then I did add to some SPY call options. And I also added some QQQ call options. And there was a fake out at the end of the day as well. At one point we were slipping into the abyss. We were down maybe 0.7%. And then the market just ripped all the way back up to break even on the day. And this was at the very tail end of the day. And then it ended up falling lower. We had a market on close imbalance of 4 billion. I've actually never seen a market on close imbalance that big. But I did add those call options. So we will have to see. As of right now, it's looking like that wasn't the smartest move because it looks like we're gonna get a gap lower tomorrow. But we will see. The trend model flipped incrementally more bullish, and yeah, we'll have to see how it plays out. If anything, I'll either have to take a stop or, we'll see what happens. The dollar index is trading up in the after hours. It's up 0.31%. Imagine this if the dollar index was just and broke out. That would be nuts. Right now it's on the table, and what it's starting to look like to me is we got the dollar index doing the wrong thing. We got the bond yields doing the wrong thing. The VIX hasn't even begun to move yet. The QT program hasn't even started yet. I don't even think the Federal Reserve is going to get very far in this tightening cycle. Getting the Fed funds rate up to 4%. The financial system blew up in 2018 and we didn't even have the Fed funds rate at 4%. So this is looking like it's not the best scenario into the end of the year. But we will have to see. My trend model flipped from a -3 to a -1. We'll see if it flips back tomorrow. But let's take a look at some charts that actually look pretty interesting for today. And this is, let's say the market's resolved. We get the happy path scenario. PRVA. This is a name that we traded back in the beginning of the summer. And we took this one for a nice winner. PRVA, it's in the healthcare group. And it's a pretty fast mover. Pulled back to the 20-day simple moving average. Now it's bouncing higher. Healthcare is definitely one of my go-to groups. When the market gets to an oversold condition and it starts bouncing. Healthcare is like a pretty defensive group. So that one looked pretty good today. What else do we have? CSIQ today looked very solid, up 3.84%. So there were some stocks, not a lot by any means, but there were a few stocks that bucked the trend of market weakness. Also, take a look at SHLS, Shoals Technologies. This one as well looks pretty great, right? And we're just consolidating above that 20-day simple moving average. And then, of course, a lot of these China stocks. PDD was the big winner out of China. Check this one out. Up 7.22% today. Breaking out of consolidation. Looks very good. And then, what else do we have? Alibaba. We had Futu up almost 7%. What the heck? That would be nuts if we had a period of China versus the U.S. stock market outperformance. We'll have to see. These Chinese names are so fickle. And we'll have to see how they respond tomorrow after the news of this semiconductor export ban. We're pretty much in a situation in the world where, like, there's just not enough stuff to go around, and it's not a good look. So yeah, the markets, they remain in a pretty precarious spot. I would say the one good news for today, we'll leave off on this, is that crude energy or crude oil is actually coming down. So we had it, I believe it was like a negative 2.5% day today, something like that. Crude oil is back at $88.97 a barrel. So we got to remember like the way the market moves. So we had like these hopes that, oh my gosh, inflation is cooling. Isn't this amazing? And we had crude oil that was moving to the downside. Like, it was a great thing, right? And then we started to see crude oil rallying. And at that point, the markets were like up here. Now we've got the markets are coming down and crude is also coming down, which reduces the inflationary pressure. So at some point, we might find ourselves in like a washout situation where it's like, all right, the stock market's been destroyed. Crude oil's been destroyed. Okay, now there's no more inflation. And like, you know, that would be the happy path. But right now we're sort of like in this price discovery. And the bond market just continues to sell off. So we really need to see some strength in bonds. We need to see some weakness in the dollar. So yeah, definitely in a precarious spot. Never a dull moment. Tomorrow's going to be legendary. And we'll have to see what the river brings, team. Hope you all have an awesome night. And we'll see you all tomorrow.